Hello there, my friends. Chris Marcus here with you on Friday, November 16th for Arcadia's weekly market update. Today, the focus is really going to be on where all these things stand, the debt bubbles, gold and silver, cryptos, as we're getting towards the end of 2018, amazingly enough. It's been a challenging year where on one hand, we've seen things like the petro yuan be developed. We saw Russia dump their treasuries. We've seen other countries walking away from the auction, interest rates going up, real estate markets starting to slow down, and thought would be a good time to really provide an overview and just take a look at some of these things that are happening. So real quick, on a couple market levels, you can see here, Dow Jones 25,349, S&P at 2729, and NASDAQ at 7218. So we've finally seen, for example, let's pull up the chart of our NASDAQ here. After about a 10-year bull market, we've finally seen some of these markets slow down. So this is the 1-year chart. Let's take a look at the 5-year. And as you'll be able to see, obviously just rising stunningly over these past couple of years, although NASDAQ did cross 8,000 earlier this year and down to 7218 as of this video. So certainly there's been a significant sell-off from the peak. And I would argue that should rates continue rising, we have quite a ways to go. I mean, you can see down here in 2008, looks like, where do we go? There, got down to 1400-ish, and now it's up to 72. Let's see if those old math skills are kicking in. So about 5 time multiple on that one, 5 times 14, yes, I think is 70. So somewhere around 5 times higher. And I would suggest the main reason for that is because you've had so much money printing and that money has to go in somewhere. And for the most part, it's gone back into the financial markets, with the NASDAQ being one example of that. Obviously, housing, a similar effect, and maybe housing coming in more even than some of the stock markets. So, and why is it happening now? As I've been saying all year, you have the rising interest rates, which is putting pressure on these markets. Essentially, one way of thinking of rising interest rates means the printed money is being removed back out of the system, which by extension means it's removed back out of the market. And certainly when you print a lot of money and then remove it, the conditions we saw even before Lehman collapsed in 2008, I remember being back on the, still back on the American Stock Exchange, trading equity options back then. And, you know, even a year or so before that, there was great market volatility and chaos because rates were going up and putting pressure on the bubbles that existed then. And you're seeing a lot of that same behavior now, which is what happens when a lot of the malinvestment is exposed. Certainly, we've seen some wild volatility. Here's the 1-year chart of the oil market, which, it's amazing, sits at 56.75 today, was as high as, did it cross 80? Let's zoom into our 3-month chart here. Looks like maybe the high was 76, close to 80. And then really since early October, so in the span of a month, has dropped back down to 56.75. While sanctions are being threatened and slapped around, I don't think the underlying supply and demand has changed that much over the past 6 months. Yet you see how much the market has moved both up and down. I would suggest if you look at the paper contract trading, you might get a better insight into why some of that's happening. And what ultimately happens with oil, on one hand, you have dollars being printed, so there's a case to be made that the price would be going up just because it's priced in dollars. But certainly a lot of factors involved. And again, maybe the takeaway is that when interest rates go up and the cheap money is removed, you start seeing a lot of volatility, which I would expect to continue. Over in the US Treasury market, the 10-year yield at 312 today, 52-week range. It had been as high as 326. Fed raising interest rates, supposedly unwinding their balance sheet at an even faster pace. Whether that's actually happening, you know, call me a skeptic. I take everything the Fed says with a grain of salt. And as analysts like Dave Kranzler, Rob Kirby, and plenty of others have suggested and provided actually a lot of evidence for, maybe the Fed isn't buying, but kind of bizarre that in the process of Russia dumping all their treasuries, that the market actually rallied, which has led many to believe that the Exchange Stabilization Fund is perhaps doing a lot of stuff behind the scenes. And I come to believe that is quite likely to be true. Again, I'm careful of how I phrase a lot of things because there's not a lot of folks coming out and putting their names on the crimes that I believe that they are committing. Although, as mentioned last week, JP Morgan trader actually did confess, pled guilty, and mentioned that it was widespread practice in terms of the silver manipulation. So we're getting some official confirmations, and I would expect that to continue. On a side note, I do hear from the political front a lot about these sealed indictments and a lot of unpleasant things that some household political names have been involved in, whether it's WikiLeaks, the Clinton email servers, but I do believe more will be coming out about that in the near future as well. And how does that all factor into the finances? Again, here you can see the cryptos, Bitcoin down to 5,600, Litecoin down to 43 bucks. So that means that the cryptos got hammered pretty good this week, which, you know, in these situations, I like to think, all right, sometimes there's an event that causes a price movement that, you know, you should adjust to. And then sometimes it's the market not understanding or getting things wrong. Obviously, similar to how we looked at the oil market and what you've seen in cryptos, there's been a wide range of prices, some high, some low. They can't all be right. And certainly as I've continued to do more research, did a couple interviews on the Stock Pulse network with some crypto experts. And when I look at the underlying adoption, what the technology does, how it's being used, I will maintain my belief that certainly if you want to tell me 95 or 99% of the cryptos will be gone in 10 years, I could accept that. Although for the ones that meet a specific business case, of which my favorite these days are Litecoin. I also did an interview with one of the guys from Dash, and really excited about, after learning more about that, also Veritasium, and you know, the ones that, because it's all connected. You know, you start with all the stuff we talked about in the beginning of the video, and hey, maybe cryptos are what they are now, but we're dealing with a dollar infrastructure system that, if anyone wants to debate whether it's a Ponzi scheme or not, leave your comment below, or can even come on the show and we'll discuss it. But as Joel Valenzuela of Dash mentioned, down in Venezuela, people are using cryptos because they have to. The currency has collapsed. And similar, while that hasn't happened on a wider scale in the US yet, a lot of momentum behind people living with the dollar system. Certainly, I don't see any way that it doesn't eventually happen. Maybe it takes longer than I would think. But again, whenever that happens, that money, to the degree people are going to continue to live and eat and do things, if that money is flowing into cryptos and gold and silver, which I believe it will be, then regardless of what the prices are at today, they'll have to be a lot higher, which is really how perhaps you combine the fundamentals with trading. Again, just a quick look at gold and silver. Gold at 12.21, silver at 14.42. So like the cryptos, still quite low. But the thing is the majority of the world isn't focused on the problems with the dollar. Majority of Wall Street talking about tech stocks, how you should just keep buying Amazon and Facebook, with no end to what the price target would ever be in sight. Yet all these things are still there, and maybe it'll take another market meltdown like 2008 before that changes. And that's the thing with whether it's precious metals or cryptos, the fundamentals to me are pretty clear, yet also in terms of the pricing, there's a degree to which for the price to go up, all the other people who don't get or aren't aware of this same things that we're talking about here, it's when they become aware of it and say, oh, well, that makes sense. The dollar now, I'm seeing the problems with the dollar. I'm going to go out, buy cryptos or buy gold and silver. So that's the balance of knowing when something's out of line, but also trading it and having other people move the market because they're getting in and buying. And until someone can explain what the U.S. is going to do with the 21 trillion of publicly stated debt, or the 100 or 200 plus trillion of obligations to Medicare and Social Security, or how with the real estate market already melting down with rates at 2.25%, what would happen if we hit 3 or 4? Or, I mean, keep in mind, leading up to the subprime bubble, when Alan Greenspan started raising rates, he took rates all the way up to 5.25% before he started reversing course. We're nowhere near that. The bubbles are bigger, Fed's balance sheet is bigger, money supply bigger, the debt bigger, and already kind of running into some trouble. So it may take a while, but I continue to think maybe it will sit there until we hit the break point and then watch out after that. So should be fascinating times. Again, doesn't have to mean that we can't make the best out of this or be prepared. And again, my two things that I do on my own, at least from a financial standpoint, is having the cryptos I like, and gold and silver or precious metals related assets, and learning to just be patient and leave them there and let them sit there, and hope that as long as they're on sale, have the opportunity to buy more, add to the position. And you know, perhaps it's one of those tests of your patience, or how much you believe in your trade, or how thorough you think your research has been, and perhaps we'll find out. But that's what I'm doing. And if you have any questions or comments, you can leave them below. Happy to comment on them. And with that said, just wrapping up, this video is sponsored by Miles Franklin, where you can buy gold and silver by going to milesfranklin.com or calling 1-800-822-8080. So with that said, get out there, have a great weekend. Thanks for watching, and I will talk to you soon.
The land of Arcadia.